Hey, what's up, guys? Let's wait for other guys to join. We are three of us so far. But in the meantime, let's get this perfected in terms of our setup. So, guys, let me know from the comment section if you can hear me nicely from that side, the voice projection. I'm quite excited about this. I feel like YouTube is the best platform for learning. Vision Institute, welcome, guys. Just guys on audio, in terms of the voice projection, let me know. Terence, welcome, bro. Yeah, no visual. I've done it on purpose. We haven't shared the screen yet. Let me. If I share the screen, I can't see the comment. Oh, thanks, Clarity. Can you hear me? Welcome, Clarity. Welcome. Okay, guys, let me find a way to share the screen and still be able to see. Okay, again, guys, how is the screen? Can you see my screen when I share it also? Let me see if you can see my screen. So we set to go, guys. Okay, perfect. I think I can begin. Okay, we'll begin with gold. Okay, we'll begin on a clean chart. First of all, when you start trading, it's important, guys, to have a bigger picture in mind, to see the bigger picture first. So let's go to a weekly time frame and see what we have. Okay, this is our weekly time frame on gold. I think we can start from here. We had what we call break of market structure. Okay, we have a break of market structure formation at this point. A break of market structure. So now we're well aware that when price breaks structure, obviously we have to use force or impulse to break the structure. So this movement after breaking of market structure, we call it impulse. Impulsive movement. The impulse is followed by a correction every time. So market will give corrections. So our aim is to study the end, how the end of that correction forms to prepare for the new impulse. Because every time price impulses, we have a corrective mode, impulse, corrective mode, impulse, corrective mode. Then we prepare for new impulse. So it's important for us to understand how the end of the correction looks like for us to take advantage of the new impulse. Okay? The new impulse is going to come after the end of the correction. Okay, so let me just go back to check, guys. Sorry, I just want to check how many people are. We are 13. Thank you, guys. I think we are ready to go. I can take that number. So we've got a new impulse, and after this impulse, obviously price goes into a corrective mode. From the impulse to a new corrective mode. So what happens is after this correction mode, we have to study how this correction will end based on previous higher point, lower points to prepare for the new impulse. This is what we're talking about. So price will always impulse. By impulsing, the momentum in the impulse causes the break of structure. The impulse in the momentum in the impulse is what breaks the structure. When structure is broken, we introduce what you call new higher high. So we've got a higher high here. The impulse creates a new higher high. Another impulse creates a new higher high, which means we've got a higher lows as opposite. That is what is going to form our, okay, let me just go up. So guys, whenever you want me to, or if you can hear my voice nicely, just comment in the comment section. Okay, higher high. Lower, I mean higher low. Higher low. So after this higher low, we prepare for another new higher low somewhere in the future. And we prepare for another new higher high somewhere in the future, depending on how the price development carries on. Okay, but we noticed that after this higher high, price gave us this lower high in this case now. And before the lower high, we can notice the price forming what you call an SMS. An SMS happens when price fails to swing above the previous higher high to create a lower high. Lower high. We are dealing with 1 week, guys. I will break down to lower time frames because the essence is to understand where we come from, where we're coming from. So history is going to interpret the future for us. Okay, so we've got lower high. Okay, let me take this as a lower high, higher low, I mean, higher low. Lower high, the movement from the lower high pushes with higher momentum to break the previous low. Break the previous low here. Okay. Once that happens, means that this qualifies this movement to be an impulsive movement. This becomes the new impulse movement. And that area is broken changing to change of character. Let's take it like that. Okay, let me take out, I want to take out this guy. So we have got a new impulse. Now, in terms of cycles, I want to explain this in terms of cycles. Or, I mean, not impulse, guys, sorry. This is now a corrective mode. Correction. Or pullback. Correction. Impulsive correction. Okay, so now what we have in terms of cycles, we have price. I can start the cycle from here: 0, 1, 2, 3, 4, 5. That is how price moves in impulses. So I'll just move the waves. Price moves in impulses. So we've got 0, 1, 2. I mean 0, 1, 2, 3, 4, 5. And after 5, you start your 0, A, B on that lower high, C on the new low. C on the new low. Now what happens is this area creates the liquidity called the buy side liquidity, sell side liquidity. Sell side liquidity is accumulated at this previous low, which is our higher low. And whenever the moment price changes from higher low to lower low at C, lower low or lowest low, when price completes that correction ABC, we introduce a new form of impulse called 0, 1, 2, 3, 4, 5. This is what I was referring to. That is what we expect price to form. So with the waveform, now 2 should never pass below A. So I'll change that to previous high by removing that and say previous high level. There we go. Yeah, so guys, this 2 can only be valid when it closes below A. If it goes below A, it's invalid, then we are going to go down furthermore because we are going to break this low. But our entry target for a bullish momentum should begin when price reaches this level. Why I'm saying so, between 1 and 2, there has to be a correction called ABC. A corrective form called A, B, and C. So this is what we should study now at the current price. So let's go to the lower time frame, daily, and understand that. I hope we're following, guys. Let me just check the numbers. 13. All right, guys, in the comment section, guys, you can always free to comment there and see, and let me attend to your question or where you want me to explain furthermore. Okay. So this development, we have got leg 1. Now we are forming wave 2, which is a correction ABC. That's why we have to employ the Fibonacci, and that should be at 50%, 61% or 78%. Yeah, so 61%. And I'm expecting a corrective move to at least come to 2. Just a moment. Okay. So at this point, guys, 61%, this is a corrective move. So what happens is you have to wait, you have to take, if you try to trade from B to C, you have to take it at 78%, or I mean, that's 61%. Now, in what time frame, we'll understand what's happening there from A to C. So let's switch over to 1 hour, or I mean, let's try 4 hours. So what's happening is we've got, let me first, I forgot to highlight this. In daily time frame, we've got, okay, from them, we've got a nice corrective channel. We've got a nice corrective channel. Okay, then let's switch to 4 hours. In 4 hours, we've got a nice bearish trend. We've got a nice bearish trend. Let me remove the waves from this 1 and 2. Yeah, we have a bearish trend there. This is why price was selling. This is why price was selling there. If you follow me with this smaller channel here, we first had price breaking we had price sweeping liquidity above these highs. Okay, price swept liquidity above this high. Price swept liquidity above this high, and after sweeping liquidity, the banks close the buys that cause the manipulation of this price and adds more sell orders, which increases the volume in price. That's why you see price impulsing every time it sweeps liquidity. It gives a strong move, and you can see the skip in price. When price keeps or forms a gap, means that there's so much pressure in this movement, and that pressure led to price breaking previous low here, which this becomes the change of character intermediate wise. We've got a change of character, and that qualifies this to be an impulse, like we said earlier. That becomes the impulse. Impulse, then correction. Correction at 61%. Correction at 61%. That's where the move, that major sell happened. That's the power of this analysis, guys, because you get to catch those strong moves. And we have to take these previous candles after close of that gap as your supply level. So price started supplying off these previous highs, and we wait for price to close below and sell. That sell movement has got enough force or volume to break the market structure. To break the market structure. Again, price after this movement as an impulse breaking the structure, we need a correction at this point on equal highs. Price sold again. Okay, again we break the structure. Okay, guys, excuse me. Allow me to just use this as a whole thing. Break of structure. Break of market structure. We got some form of equal highs for sell or resell. So all these areas are supply zones. All these areas are supply levels. Level of supply. A break of market structure again. Now, when price breaks structure, obviously we are saying let's trade the first high of the correction. So from this movement, I think we have to take that as the initial correction point, which becomes the supply level. That won't be as part of the supply because it's part of the bearish channel. I think this can only be correct. Okay, so we cannot take that correction, that high as our. We cannot take that as our supply because it's part of the bearish movement. It's a supply for this movement. So the major supply of that correction will take this movement as a correction. This was the correction. That's why we can consider that as a high part of the correction. At from this high to that low, price was at 61%. Okay, guys, let me know what you think on this note. It's very important from the comment section. Okay, Clarita, can you okay? Can you upload your live video so other traders like beginners etc. Okay, I will upload it. Please upload to YouTube. I will upload it. I think automatically the YouTube will keep this video unless I delete it. So the end of the correction using Fibonacci gives you the idea around where you should expect price to end the correction. That was the area. So guys, you will fall a victim of this point, trying to take this as a supply, and you suffer these pullbacks and major drawdowns on gold. Seven people. Thanks, guys, for coming through to the live. Thanks for your time. I hope I'm going to add value to your trading journey. So let's go. And that's why we are to sell when price closes at this point. So you notice what I'm doing here. Every impulse is a channel. Correction is a channel. So within the channel is where you find the previous high. The previous high point tells you the area where you have to sell. So we can only sell gold when price drops and closes below the previous high point. Previous high. The previous high point. So you are entitled to sell on the correction when price comes to close below this point. That is your sell level. If you are selling there, if this is your sell entry, your stop loss should always below. Your stop loss should always be above the sweep of liquidity. That is your sweep of liquidity. Let me label that in. Guys, this is your sweep of liquidity here. Okay, sorry. That is your sweep of liquidity. or stop hunt. Let's just say stop hunt. That spike, this spike here is a stop loss hunt. Trade the correction. After stop loss hunt, price will increase volume in the sell and wait for price to make a correction, but it should always be below previous high point. Okay, so this is our A level. So remember, we have to measure the end of the correction by calculating from 0 to 1 at the top. So price was at 50%. That's where price stands, 50%. The other help from guys, if you want to know where this correction will end, is you can sometimes look at the back. You can see that resistance there. You can see the resistance there. So right through, there was a rejection level there. But all these movements should happen considering that previous low, and that whole thing was a sweep of liquidity. Wait for price to start closing above that line to buy. So that's why after sweep of liquidity, price pushed up, collected above the line, and we bought. Then there's a new correction. This also should be within this level, between there. This is where you should expect the sell to take place. I mean the buy. So what we are saying is, if this movement from there, okay, let me take, guys. I don't want to take from there. I'll take from here. That was the impulse movement 1. This is an independent trend. Then that trend, then the corrective phase. So the corrective will be. Let me remove this. This is AB. This is AB. I think then we have to have another one for C. But we'll see how price works out here. So what I'm doing now is, I know price has reached this level, so we need to look at previous high points. So that is my previous high price. That is my previous high. Previous high level. So with that in mind, previous high, that is another stop loss hand. How do you take this? Doesn't want to be taken, okay. Oh, that's another stop loss hand. That spike. The spike above the previous high, same sequencing, similar pattern. So now we've swept liquidity above the high. That drop after this should break the previous low. So we've broken, that previous low was broken, and we're breaking another previous low. So what does this tell us? That is more like a change of character. Change of character and break of market structure. Break of market structure. This is gold, guys. I'm going to spend a lot of time on gold, but we're almost done now. So that movement alone breaks the structure from here to here. We break the structure, meaning that we have introduced a new price. That was the lowest. Now we've got a new lower price. So in terms of labeling, we will have our lower low, another lower low, another lower low we are expecting, maybe there. And then we have got the opposite, higher high, lower high. Lower high, yeah. This is the lower high. Guys, I'm calling it a lower high because we are going low. So the lowest becomes the first letter, the high, then second. So I'm expecting for price to, after break of that structure, we've got that white candle, the high. That becomes our supply level. I think from there, we should expect for price, whatever it does, to do that. So we introduce a new lower low, new break of structure. We trade in the direction of the break of market structure. Just a matter of time. 4 hours, 1 hour, 2 hours. This is where we are. You can see change of character, break of market structure, prices making more lower lows. And that is a lower high. Okay, which one? This is the lower low. What's this? Higher high first. Let's say higher high. Higher high. And we've got a lower. I think let's take that at the lower high. Lower high. Lower high. So I expect for price, if anything, it can only be touch this level, but we've got an induced level 2 here. On that, we can take that if you want. Now, guys, it's not about, okay, let me say this. Now, after we've done that, it's all about risk management. How much are you exposing to the market? If your entry is here, your stop loss is above the previous point at sweep liquidity. And calculate, depending on your account size, how much you are prepared to lose. Then you can risk accordingly. We can risk accordingly. Now, when it comes to trading gold, let's get this right. You don't trade anytime, guys. It's better, now, for now, you won't see any strong movements. It will be those small movements until tomorrow, 10 o'clock to 11 o'clock or 12 o'clock, around London open. That's when you see extensive moves, or that's when you enter for. So with the London session, New York open, you can see tangible movements with gold. In the meantime, we're only going to be not experiencing small moves, so we can see it can close and open and go. And just then tomorrow, 10 o'clock, you can see price would have broken out of this trend, and we can be seeing extensive moves. But the best entry is right at this point where you can put smaller stop loss. Thanks, guys. 27 people in the house. Let's win, guys. I can see the comments are on fire. After gold, can you please check Euro USD? Okay, let's switch to Euro USD. I think we have exhausted. Gold. This is my view on gold, guys. If you want one-on-one session with me, I'm available most of the time. This is what I do for a living. I can help you if you can be part of my mentorship program, and I can help you build. I think Credit, I'm helping you in this breakdowns. If there's areas where you need more polishing, you can always WhatsApp me. We can do it, or even after this session. So let's switch off to Euro USD, guys. I'll start Euro USD from the. Remember, you always have to start from the highest time frame. Let's start from 3 months. Euro USD from 3 months. I can show you in another version, guys, but it's fine. I wanted to show you where this comes from, so you understand. Euro USD, they have just taken out some data, but this comes from all the way. It's like that. This is where it comes from. So we've got Euro USD developing something like that. That's where it comes from. So this is a corrective move. There is a break of structure of the higher time frame. Price has broken structure already, and this is just a corrective move. For Euro USD, the corrective move, we studied the correction very well because it's going to give us the entry for the impulse. This is what it looks like. Euro USD, okay, 3 months. Looks like this. All along from 2008, price has been in a corrective mode. Now, the aim is to understand the correction, because remember, the correction can be in a form of ABC. 0ABC. So price will sweep liquidity below A. Three months. So imagine if this is 3 months, yeah. Right. January 1, April, May, June, July, April 2026. So each candle, guys, represents 3 months. Wow, 3 months, 3 months, 3 months, 3 months, 3 months, 3 months. So you can see that from that high price, price of Euro USD was just buying, if you understand what I've just explained. So we are the break of market structure here. We are the break of market structure. For the beginners, you can do this, guys. Forex has been highly complex, but it's you can figure it out. After break of market structure with an impulse, that area you can mark out, or that area there. That is a sweep of liquidity. This is a sweep of liquidity. Price drops to break a new structure, but now this area is no longer a break of structure because when it's close to the trend line, it becomes what you call previous high, previous low. Previous low and previous low versus sell side liquidity. So this is a sweep of liquidity now, again, the opposite. That sweeps liquidity, and we use the Fibonacci from the low to the high, 61%, but we consider 50% above the previous high as valid. So this is invalidation. All these are invalid, including 61%, 38 and 50% are correct for entry. Okay, so we are going to buy when price closes and opens above this line. Then this move after price testing this level, this is more like a head and shoulder, guys. This is more like a head and shoulder. We can call it head and shoulder. It's a head and shoulder formation of the higher time frame for Euro USD, and price is broken the structure there. So we wait and prepare for the end of the correction and sweep of liquidity for us to buy further at some point. So let's go lower time frame. So I think we've got a trend formation there. We've got a trend formation. We go weekly. Now you understand what we're doing here. We trying to figure out at the current price where we are. So price in that channel there, I'll make the channel bigger. In this bullish channel, price pushed up, created liquidity levels here. Liquidity level, sweep of liquidity. After sweep of liquidity, price will always impulse to break the structure or change of character. Change of character. Okay, after change of character, price will give us certain laws. First, that law as a, and then we've got the new lower points here. What happens, sometimes price can come test that low, but still close above this high. Okay. For price to sweep liquidity below these two laws, it can touch that low. Okay. So I feel like price to do this movement, it will do a bit of consolidations. So let's think of it like this. So between the current high, between this level, we can expect consolidations. Similar to that consolidation, you can see it took very long consolidating the sweep liquidity in up. We can experience the same here in sweep liquidity. So now let's study what's in the box. This is weekly. Obviously, these are extensive movements. 4 hours. These are extensive movements. So between this high and that low, we can be taking, I think it's better to be studying the highs and lows. So I'll start from here. I'll just take it as, this is an impulse. I know in my mind, price is consolidating within that. So we just have to study the corrections. So the correction, this was breaking structure impulse, that level again, until price is no longer breaking price stopped breaking the highs, the lows, and started breaking the highs. So we know price is now bullish, intermediate wise, within the correction, within the accumulation mode, okay? So I think it's best to, okay, how do we do this? Okay. Okay, this is going to be change of character. In 4 hours. After change of character, price obviously will change the character with an impulse. So we have to look at the previous lows. This becomes the previous high lows. So there's a possibility price would come and sweep liquidity below the low, close above, and buy. Potential break of market structure as a high. So the trend, we cannot begin the trend from here because it's part of these points are part of the bearish movement. Best to start your trend at this level. We assume that's where price is going to come. So I think we have to wait for price to tap in these lows. For this is our demand. Yeah, so let's wait for price to come in this area. You can see there's quite a number of rejections in this level. So it's called double confirmation. There's strong support there and also support of the trend. I think that's it on Euro USD. That's it on Euro USD. Let me take more questions, more suggestions. Which time frame base we draw the trend line support? You can draw the trend line support in any time frame. Okay, please upload YouTube. Good, nice. Okay, I'll confirm enter trade candle base. Okay. No, guys, all I can say is you have to enter your trade on Fibonacci based on 50%, 61%, depending on which percentage is above that line. So this, we have to wait for it. And two, you have to draw a line like so. So price must break that line and retest the line, the demand zone. Yeah, so I think gold is going to sell. 51S is still confused. $51S is bullish, but we need a good entry point. Mr. Vix, just Andy Bond. Welcome, Jose Matipa. What language are you speaking, bro? Thank you for checking. You're welcome, Robin. Ribi Teko. All right, guys, what else do you want me to look at? No, I think for now we can call it a day, guys. I think I can stop here. I think we exhausted most of the pairs. Nasdaq. Okay, let me do Nasdaq last. Let's go to Nasdaq. Nasdaq is highly bullish. Nasdaq is very, very bullish. Too bullish. How about this for Nasdaq? Nasdaq 3 months. Break of market structure. Break of market structure. The entry for Nasdaq was was when price closed and opened below. That was a sweep of liquidity, close above the previous high. Okay. Break of structure. Okay, so I think we've got room to fill before we do the correction. One month, you can see our price sweeps liquidity there and close above to buy. Sweeps liquidity below there. So we've got two areas where price sweeps liquidity. What I mean, we've got price sweeping liquidity above that guy. The black candles are your previous lows in higher time frame. I think this is all realistic, and we had internal trend as well. We've got an internal trend as well. Nasdaq, don't recommend you joining it now. I don't recommend joining it now. Nasdaq was best joined at this previous low to buy this. But if ever you want to join it, then your stop loss should be below this black candle. Terence, I will save the life. Admara, no, wait, Vic, okay. Let's look at 75 and 51S. Let's look at 51S first, my favorite. 51S, guys, looks like this. On there. 51S in 1 month. break of market structure. It's an impulse. Price started consolidating within this range here. Price has been ranging within this until that swept liquidity. Above that, price pushed up just like that. And we've got the inducement. We had the inducement there. That's where I started buying from in a higher time frame. Price swept liquidity above this high, this low. Price swept liquidity and price actually had two equal lows. The moment price started closing above, it was a sure buy. Okay, with that buy, price broke structure. Price broke structure there. After the break of market structure, price gave us the entry levels at this level on the black candle. Okay, and broke another structure here. So far, we can see the clear buy because we've got a bullish candle, bullish candle, bullish candle. This market is overall bullish. You cannot sell this market because of the strong white bullish bull candles. You can see how this candle opens and closes below, because remember, guys, this means that the candle opened there. Candle opened at this low and closed at this high. Okay, open and close. But this is the maximum. This indicates the maximum price reached. Maximum high. Max high of this candle. Max high, max low. The candle opened here and then reached the max low, went up to reach the max high, then closed at that point. So you can use this data to see what's happening here. So we have got that candle opening low, max low, and then switching to open max low, max high, closing there, opening, max low, max high, closing. Then price has opened. It's at the moment price is at where it opened and closed. It's not yet closed, but it's at its opening. It's at its opening. If it gets darker, you can see that it's trying to pull back down, but this indicates that this price so far, it's max low, max high. Max low, max high. Max low, max high, open and close. Open and close. Not yet. So it has opened but does not closed. But I think this is going to close high. So all we are aiming for is for price to break if it closes and breaks these highs, this is even more bullish, because that's what is going to indicate buys for us. Okay, so let's go lower time frame, weekly. So what happens is, after breaking that structure, break of market structure, after break of that structure, price introduces a new high. So we are definitely having higher highs. Higher highs, and we trade towards the direction of a higher high. In this case, we trade in the direction of break of market structure. So price has not broken the high. That's why we're having some form of reversals. But you can see the price is increasing the bullish movement. Break of market structure, potential break of market structure. That's what we want price to break. And if we introduce the trend, we'll take from this high. Okay, let me teach you this. This is the previous trend, bearish trend. So the new trend does not begin from the last point, because this is part of the bearish trend. So we begin the trend on the high. So, and the trend touches 2 points. So we have got that point and we've got this point. So guys, you judge with me what we should expect on 50. I'm thinking price is gonna be more bullish. This is what I'm seeing as a trend. So the trend begins at this point, and this is called our lower highs, higher lows, sorry, because we are going higher. So H is the first one. We are going higher, so this is a higher low, higher low. So that is not a higher low because it has not broken the high. The moment we break the high, we are going to have a higher low. Guys, if you're not part of my one-on-one mentorship, I don't know. Okay, this is what we are expecting. We are expecting a new higher low, and price, a new higher low will start the entry by understanding the correction from this impulse. So what is happening is impulse correction, impulse correction, impulse correction. Such is the movement of the market. Market moves in impulses and corrections. Impulse, correction, correction, A, B, C. Impulse, correction, A, B, C. Impulse, correction, A, B, C. And up we go. So if you go to daily, we'll start to see better. Now, every time price breaks structure, it will leave a series of lows. Those series of lows accumulate liquidity, which should be neutralized before the bullish movement. And here, I thought price had broken that high. Price had broken that, so it left us this level here. Or you can consider that as your sweep of liquidity, close above and start buy. Just that now where price is, I don't think it's okay to buy. We need for price to give us another, let's see. Yeah, this is what I mean. Price has given us lows there. So we need to wait for price to break that, and it will give us an entry reason for entering this trade. But it looks like price is breaking highs. Yeah, so this is how far I can go, guys, today. 23 people in the house. Thanks, guys, for participating in the live. I think we can end the live today for today. But always subscribe. Make sure you subscribe. Let other people you know subscribe to the channel. We learn together. We build up together. We make money together. And from my side, guys, let me just check gold before we go. Gold. Gold is going to be selling, guys. I think it's doing well. From there, that's where I can end the session. Thank you so much, guys, for being part of this live. Appreciate you. Cheers.